If you've bought your family home, chances are your home's value has increased. With this comes an opportunity to buy your first investment property. So I'm going to show you how to buy your first investment property without using any of your own cash. G'day, I'm Aaron Christie David, mortgage broker and founder of Atelier Wealth. I specialize in helping Australian families start out and scale up their investment property portfolios. You may be wondering how it's even possible to buy a second property without having to save up for another deposit. Well, it all comes down to the concept of equity. Before we get into equity and how it works, I just want to preface that this video is general in nature and not intended to give advice. I always suggest having a chat to a qualified mortgage broker who can give you the best guidance for your situation. So, if the value of your home has increased and your loan balance has come down, even if it's only by a small amount, you can have your property revalued. Once you've had your home revalued, you can apply to your bank to lend more for your next property. Generally, they'll lend up to 80% against this new valuation. I know this may sound a little bit confusing, so let's run through an example together. Let's say you bought your first home for $1 million and your current loan balance is $700,000. After getting your property revalued, it turns out your home is now worth $1.2 million. If you apply to your bank to borrow some more money and they agree to lend 80% against this new valuation, that's now $960,000. So the difference between that and what you currently owe is $260,000. You can use the equity of $260,000 to fund the deposit for your next property purchase. You'll then look at securing a loan for the remainder of the funds that you need, which means your investment property is purchased with 100% debt. So, buying your first investment property is far more achievable than you may realize. You don't need to use your savings for a deposit. You simply have to understand how to utilize the equity in your home for your benefit. Of course, there are a few considerations that you need to take into account before just buying your next property. For starters, you'll need enough cash flow to pay your current loan and your new investment property loan too. There is also a risk with having a second loan. So you need to ensure that your first investment property purchase is a wise investment. Having said that, with great risk comes great reward. So if you bought a good property in a good area with potential growth, the value will then likely increase and provide you with more equity to then buy your next investment property and enable you to build your portfolio. It really is an exciting journey for many investors. I hope you have a better understanding of how to utilize equity to grow your portfolio. Remember, it's always a good idea to check in with your financial advisor, accountant, or mortgage broker to make sure this is a suitable next step for building your property portfolio. If you have found this video helpful, make sure to give us a thumbs up and stay tuned for some more property investing tips. We'll see you next time.